Hey, this is Justin from nextbigtrade.com. Tonight I want to talk about how to identify big trades in the markets. And what I mean by a big trade is getting in early in a new bull market where you have the potential for an investment to gain hundreds of percent over a period of months to years because you have gotten in so early in the new bull market. Big trades come after stage one bases where people are not interested in an investment. And that's key because they don't come immediately after the end of a big stage four decline, which is where a lot of people want to buy into stuff. The media focuses on panics and bubbles because that's what gets them ratings. That's where they feed off the raw emotions of greed and fear. But that's not the where to look for big trades. The media always focuses on huge, parabolic advances in markets and meltdowns in bear markets where they're feeding off of the emotions that those kinds of moves generate. So for example, when markets move up to a great extent, you hear the media talking endlessly about all the people that have made tons of money in an investment and how they're going to continue to make money in something. But in reality, the optimal time to buy into something is when it begins a new bull market, and few people actually care about it back down here. And again, the key is you have to wait for a period of time after the stage four decline for the stage one base to complete. And this is where, like, for example, in the energy sector, currently people are trying to buy into the stage four decline in energy stocks. They see a bargain in the sector, but in reality, the stage four there hasn't completed yet. So they could be sitting on, future losses by trying to buy into a market that's still in a declining phase. Stage one bases can last for years, and that's something that you have to accept and know about when you're trying to find new bull markets, because markets can exist in this oscillating basing phase for way longer than you could ever expect. And another key is they need to be asset class agnostic. The more asset classes you're willing to look at, the more you're going to be able to have the potential to discover new bull markets. So if you're only willing to look at tech stocks, you're only going to find this key optimal buy point when tech stocks make the transition into a new bull market. But if you're willing to look at commodities, tech stocks, foreign stocks, any type of investment, the more asset classes you'll have to look at to find this optimal buy point. Now moving over to the S&P 500, I want to talk about the two best times to buy stocks in the last 6 years or so. And that was really after this 2008 collapse in the stock market and subsequent stage one base into early 2009 that produced a monster move in the markets all the way into 2011. And during this period, the big gainers in the markets were well, almost everything went up a lot actually, but the big gainers were mostly like commodity and energy related plays, and it's kind of some of the same stuff that had huge gains going into 2006 and 2007. But back the second optimal buy point in the S&P 500 in the last 6 years was after the 2011 kind of like mini stock market correction, bear market or whatever, where the market, essentially went sideways all during 2011, had this big drop, consolidated again, and then, it still went back up in 2012. But by the end of 2012, if you go all the way back to the beginning of 2011, the market hadn't gone anywhere for almost 2 years. So this was actually a gigantic basing phase, which produced another monster move that we've just witnessed in the market in 2013 and another rally in 2014 until now. So, this period right here, this basing period, produced this next monster rally that we've just gone through. And actually, what's interesting about the end of the 2012 period is where CNBC and the media was all panicked about the fiscal cliff, and I actually had a radio reporter call me in December 2012 asking me questions about how I thought, or if I thought the market was going to collapse in early 2013 because of the fiscal cliff, and I actually said that, due to all the negativity in the markets, I wouldn't be surprised if we saw a strong market to start 2013. So next I want to talk about, identifying these big trades, and I'm going to focus on this period after 2012 where we've had, a very strong market in 2013 and on. And the first stock I want to talk about is Tesla. And Tesla is an ideal example of this basing phase that can last for years before the ideal buy point is reached into a new bull market. I mean, if you look at this stage one base in Tesla, after Tesla IPO'd all the way up into early 2013, the stock just did nothing. I mean, nobody was interested in Tesla at all. Um, this is just like a stage one base that, I mean, it's just like a straight line for, almost 3 years into early 2013. And back down here, CNBC was not talking about Tesla at all. And unlike up here where the stock made a tenfold gain, CNBC's been talking about Tesla ever since sometime in 2014. They talk about Tesla almost every day now. But you can see this like awesome stage two breakout where we had a huge increase in volume, and Tesla broke out into a stage two, and then it advanced. It was a 10 bagger from around under 50 to over 275 back in late 2014. Um, so obviously, like when the media is all hyped up with Tesla back at the top of its stage two, this is not where you want to buy. Where you want to buy is the transition into a new bull market. Next, let's talk about another huge trade over the last couple of years, and that's the biotech sector. And you can see that, here's something the media doesn't talk about: how long biotech actually ground sideways for years before it actually broke out into this, powerful bull market we've witnessed over the last 3 years. I mean, the IBB Biotech ETF really, kind of got started into it in advance back in 2010, but didn't really get going until, the bull market in the S&P 500 really busted out in late 2012, and this was like became the leading sector for the market ever since then. So this is a bull market leader, but really what allowed biotech to become a leadership sector in the market is the fact that it based for so long, and people just did not care about biotech stocks for years before they finally broke out into a new bull market. And if you talk about biotech, I mean, now on Fast Money on CNBC, they have a biotech reporter that gives you details on biotech stocks every night on that show, when biotech's up here, but in reality, the ideal buy point was back here when nobody cared or was noticing what was going on with biotech stocks. So again, the key is to pay attention to what's going on in movements in the market, and that's where you find big trades, not when the media is telling you about big trades up here where everyone's already euphoric in a market. It's down here where only those paying attention can get in early and reap the huge rewards. Next, I want to talk about Apple. And Apple is kind of an interesting stock because, I mean, the big, obviously, trade in Apple was just buying it when it busted out of its, the 2009 bear market bottom up until now. But another interesting point in Apple's life cycle was in 2013. People were actually very bearish on Apple stock back here. I'm going to show you an article from CNN, and you probably won't even recognize what they're talking about here, but look at this headline from CNN. It says Apple profit falls 22% but beats gloomy expectations. I mean, when's the last time you heard the phrase gloomy expectations when discussing Apple stock? It's been, a few years since we've heard such talk, but here's what they're talking about in the article. They're saying, as it turns out, Apple still has a little surprise left in it. The company sold 31.2 million iPhones last quarter, a number practically no one saw coming. I mean, you could just kind of hear the bearish tone in this article just from reading what they're talking about. And this was written back in July 23rd, 2013. So if you look at this chart of Apple, that's exactly where, people are bearish on the stock back here, but in reality it's completed this basing phase for, half a year, and actually, it declined from, mid to late 2012, where people were more euphoric on the stock back here. And since then, Apple has gone up, 100%. So by buying into, kind of a negative sentiment period, or, where people had abandoned hope on Apple, you get 100% gain. And now, people are more euphoric on Apple up here when the Apple Watch is coming out, but it's left to be said whether this is a good buy point, or is going to become as good a buy point as this was. I would, just from experience from what we're talking about here, I would think that this buy point here is not going to be nearly as good as this buy point here. Another example is Facebook. Facebook came out with a lot of euphoria back in 2012 when it IPO'd, and the stock just immediately went lower. People were selling it immediately off of that huge euphoric sentiment back then. And Facebook based for essentially about a year after IPO'd, where it just went sideways and people got fed up and disinterested in the stock. Then all of a sudden you see a huge volume increase here in mid 2013, and Facebook is propelled into a new bull market. So, Facebook has gone up 3 times since mid 2013, when people were bearish on the stock after it completed a year-long basing phase. And again, this is where, if you were paying attention to how Facebook started moving, you see this volume increase, you see the breakout into a stage 2 advance. You can get in early into the trade and ride it for years, while people, now up here, people are more bullish on Facebook. But I wouldn't say the sentiment on Facebook is really extraordinary bullish still. And the reason why here is actually Facebook has kind of based again for another year. So, some of the social media stocks have been moving recently, and I wouldn't be surprised if Facebook, might have another advance in it coming up soon. And one last example is the US dollar. And the key to the recent parabolic advance in the US dollar really is the fact that it went nowhere from, almost like the end of 2011 until the, middle of 2014, where the parabola started. The dollar went essentially sideways for about 3 years. So, this basing phase, where it kind of had two false start stage 2 advances, is actually what produced this monster run in the US dollar, because all this pent up, um, you know, motion into a new bull market was established by this monster basing phase. So the media won't tell you about why Facebook launched into this monstrous bull move, but it was really because it based for so long, and people gave up hope on a higher dollar before this huge move. So just to summarize, big moves come after stage 1 bases. They don't come after euphoric moves in the market, and they don't come after monster declines in the market. I mean, you think you're buying into a good investment after a huge decline, but you have to wait for the basing phase, for, the give up phase, where people aren't interested anymore, and the overhead supply dissipates too then, because all the selling has gone, and the market's actually in a supply and demand balance in the stage 1 base at the end of it, which is what eventually produces the ability for the market to go back into a stage 2. Because after supply and demand comes into balance finally, once the supply and demand tips to the buy side, the stage 2 advance can commence. Thank you, and I hope you enjoyed this video.